Here's a simple and effective day trading strategy you guys can implement into 2024. Trading the test of prior day close and prior day high are often great levels you can utilize. If you do enjoy this video, if you please give it a thumbs up and subscribe, it would be greatly appreciated. Enjoy. Alright, so in this video I'm going to cover a simple and basic strategy that you guys can implement into 2024 that simply involves reading price action in trading levels. It doesn't involve any indicators or anything that's crazy hard to understand or super complex. It simply is trading levels, knowing which levels to trade off of, the longer time frame structure, then going into what do we look for when we enter. So the first thing being said, the levels that I typically watch are going to be the prior day close and then the prior day high. So the prior day close is simply the price that the stock closed at the previous day. The prior day high is simply the high from the previous day. And how we are going to be trading these levels is we're treating them as resistance below. So trading into them if we're coming from underneath, watching a rejection. On the flip side, when we're trading them up and above, so if we were trading up here and then we came back into the level, such as coming down into here, then we would act it as support, identifying this as an area where we could get a bounce move like such. In today's example, we're going to break down top-down analysis on Amazon and then going into mRNA. The first thing I want to say before you just take these rejects off of a prior day close or a prior day high, or the bounce plays off of them, understand the macro construct. So if we go in, let's maximize this sell. And what we see here is we get a weak movement here on Amazon. So we have these lower highs on the hourly chart. We're breaking down of the support, and then we're rejecting this descending trend line here. So from the hourly, it's looking bearish. It's not like over here where we're in this ascending trend line and we're in this ascending trend on the hourly. We are looking weak and then rolling over here. Now, if we zoom out to the daily too, this is a failed flag follow through. If it was strong, it should have cracked and broke this prior day's high here. Then I would be looking for a pullback into prior day highs to take this long. Instead, this is a failed flag follow through, rejecting where? Right at the prior day close. So if we restore this style here, not only are we coming into the prior day close right here, you can see this orange line is that prior day close. We spike up into that descending trend line from that hourly chart. So let's go in here. From this right here, where we start here and we reject, and then we reject again here off the open. So we're coming in, we have an area with multiple confluence where we bounce, and what's the sign of a reject? This strength should have followed through here. So the fact that there's just spiked up and boom, bearish engulfing bar, sold off completely and continued to the downside here. So this is an example of a 2-minute spike and reject of that prior day close. Also the 5-minute, look how weak this 5-minute close. We spike up into this trend line. We also spike up into that prior day close, and then we reject that move. So we're looking for rejects if we're coming up into this level, ideally with multiple areas of confluence in a weak looking daily chart and especially the hourly chart. And then we can zoom in onto the 2-minute then for that entry. So we spike up, fail. Now, where do we sell? You can either sell into levels. So if we have levels mapped out below, we're selling into them. You could do bar by bar. So if this is your entry bar, you'd stop out on the first candle to make a new high, which is going to be right here. So a decent scalp here from 150, 150 all the way down here up into 150, 30. Very, very nice scalp here on that move. Or you could go for our target. So if you're entering risking 10 cents, then your target, for example, would be 20 cents. So identifying how you are going to be trading them. But you guys will notice how common of a reject or support spot these levels are depending on where the stock is trading. So the simple strategy is either eyeing a bounce move, which I'll show you in the next example on Moderna of the prior day close, or a retest and failure below the level for a rejection like we see here on Amazon, where we get this move to the downside. Now, let's go into Moderna. This is an example of a strong name in a strong uptrend. So that's the first difference from Amazon to Moderna. Why would we be looking at Moderna longs? Well, look at this trend on the hourly. This is a much stronger trend here than Amazon, where we broke down that trend and we looked much weaker. This is constant higher highs, higher lows. Now, let's go in and let's take a look at the daily chart. that's a strong looking daily chart. You can see higher highs, higher lows. We are not failing to break below. And then all of a sudden we try to push lower and we can't even get a move down when the market was weak. So that's another sign of strength here on Moderna. Now when we come back in, where did we hold support? Right here into this prior day close. So you can see we pull back right here, boom, push off the open, and look at this extremely strong move that we got here. Even if you're just trading bar by bar, it didn't take you out till way up here into this prior price level. Now, it ran $5 a share after that, but the principle being we're identifying structure on the daily and the hourly towards the side that we want to trade. We want to see strength in trending structure on the daily and then into the hourly when we're looking to take a hold of the prior day close to look long. Flip side, like Amazon, when we are looking weak, then we are going to be looking for that rejection. Now, when we go into this, again, where do we want to sell? You should have that predetermined before you get in. Do we want to sell into this level? Do we want to sell into a 110 whole psych region? Are we doing bar by bar? Map this out before you get into the trade because you'll find yourself questioning where you should sell constantly if you don't have this mapped out before the trade. So you want to, again, have that pre-trade plan. What are we looking to long or short? What is our plan to get in? And then what is our plan to get out? So utilizing these three levels, mainly those two levels of the prior day high and the prior day close, can greatly help you guys understand structure, identify areas where we reject to take to the downside, or if we hold to take to the upside. I hope this video helps you guys. If you have any questions or comments, feel free to leave them down below. Thank you.